Well, Brett Hanson returns this week to continue our discussion on what the new UK Prime Minister and Chancellor could mean for British taxpayers. Last week we looked at income tax, capital gains tax and pensions. This week we'll focus on inheritance tax, before asking Brett to share his practical advice for listeners. So there seems to be a lot of speculation and discussion around Andy Burnham's views on inheritance tax. How far any reforms might go remains to be seen. But what do you think are the chances of significant changes being announced in this year's autumn budget?
Inheritance tax, Howard, has become an increasingly important source of revenue for successive governments, largely because rising property values and investment portfolios have brought more families within its scope. With continued pressure on public finances, I think it's reasonable to expect inheritance tax to remain under review. I know that in the past, when Burnham was the Health Secretary under Gordon Brown, he supported replacing the current inheritance tax regime with a flat 10% tax on all estates. Whether there will be major reforms this year or any time soon is difficult to predict, but governments often prefer targeted adjustments to allowances and reliefs rather than completely redesigning the system. One misconception we frequently come across is that moving to Spain automatically removes someone from UK inheritance tax. Unfortunately, that's not the case. Depending on a person's long-term connection with the UK and the nature of their assets, UK inheritance tax may still apply. That's why expatriates should still pay close attention to any changes announced in future UK budgets.
This seems like a good opportunity to discuss the major inheritance tax change that's already scheduled to take effect next April. Pensions becoming subject to inheritance tax for the first time. I recently read a report suggesting that 74% of savers are unaware of the change. Will this reform affect many families? And how significant might the impact be?
I think, Howard, this has the potential to be one of the most significant inheritance tax changes for many years because pensions have traditionally played a central role in estate planning. Many people deliberately preserve their pension funds while drawing on their other assets first, because pension wealth could often be passed on very efficiently. With pension funds becoming subject to inheritance tax from April of next year, this changes the planning landscape considerably. For families with pension savings, the impact could be significant, particularly when pensions are combined with property and other investments, to then be taxed at 40% on death. There's no doubt that many more estates, which in the past would not have paid UK inheritance tax, will do when pension funds are taken into account from April next year.
Does this change affect British expatriates living in Spain? What steps can they take now to help protect their families from an unnecessary inheritance tax burden?
Potentially, yes. Many British expatriates have financial affairs that span both countries. They may own property in Spain, but retain investments or pensions in the UK. Under current rules, UK assets will always be liable to UK inheritance tax. But if your assets are not in the UK and you are no longer deemed a long-term UK resident, then you can legitimately avoid this tax. However, care must be taken that you don't swap one inheritance tax for another by simply bringing those assets into Spain. So the first step is to review your existing arrangements. Make sure your wills still reflect your wishes, check that pension beneficiary nominations remain up to date, and review whether your current investment and estate planning remain appropriate under both UK and Spanish rules.
Finally, Brett, what other advice would you give to listeners who are concerned about potential UK tax reforms and want to ensure their financial plans remain on track?
Well, my biggest piece of advice is not to make important financial decisions based on newspaper speculation or budget rumours. Governments regularly review the tax system and not every proposal becomes law. Instead, focus on building a financial plan that's flexible enough to adapt as legislation evolves. Review your investments, pensions and estate planning regularly and make sure they continue to reflect your objectives. For those of us living internationally, that's even more important because we're often dealing with two tax systems rather than one. Good planning, Howard, isn't about trying to predict every government announcement. It's about ensuring that whatever changes eventually arrive, you and your family are already in the strongest position possible. That's where taking personalised cross-border advice can make a real difference. It helps to ensure your financial arrangements continue to work efficiently, regardless of how the tax rules may change in the future. Of course, if any listeners would like to contact us in order to review their existing arrangements, or are planning to move to Spain or return back to the UK, then they can speak to one of our local experienced, qualified and regulated advisors by contacting us via our website, blevinsfranks.com.
Many thanks, Brett. Always interesting in these interesting times.